Welcome to Trading Nation. I'm Brian Sullivan. We are joined today by Samana, global quantitative strategist at Wells Fargo Investment Institute, who's got a very interesting thesis on not only us living in what he calls the age of discontent, but rather how to invest around it and what to do. Samir, why do you think we're in the age of discontent? Is it just really the headlines and sort of the anger that we're seeing among the population that you're talking about?
We believe it's the age of discontent because you had a lot of these issues kind of underlying for the last few decades, really, but they've really been brought to the forefront by the financial crisis, which has really impacted households to very different degrees and are now starting to impact political outcomes. And so we think that will be something that markets will have to contend with over the coming years.
Okay, so we've got that. It probably is not, to your point, going to go away anytime soon, but how is it an investing thesis? Seems more like a sociological thesis.
It is a sociological piece, and unfortunately now that's something that's probably going to affect markets because it's working through the political system. You've got, new policies that are maybe, kind of trialed, things like auditing the Fed, possibly other, issues that might start to impact markets in a more direct way, where we may not make favorable or rational economic decisions, but those based more on political outcomes.
So give us a more concrete idea as to what we should do. If we're watching Trading Nation right now, we agree with what you're saying, Samir. What do we do about it?
Probably the two biggest things in the way this will kind of materialize will be there will be a lot more uncertainty going forward, and there will be a lot more volatility going forward. For most investors, the best way to tackle those two things is one, to stay well diversified, and then two, to make sure that you don't get too carried away with short-term market movements and to rebalance and come back to kind of what would be a more neutral stance.
Okay, and how would you define a neutral stance?
So right now, probably a good idea is to start to trim stocks just a little bit. We had been overweight large caps, think S&P 500 type stocks. We just took those back to neutral with the thinking that valuations weren't as attractive. And we actually took the money and we put it into long-term fixed income, which we have been underweight for much of the cycle, but we're now back to neutral thinking that, hey, it's a nice stabilizer in a well-diversified portfolio.
Samana, the Wells Fargo Investment Institute, with an interesting idea that we said maybe trim around the edges on the stock portfolio, go a little more back to neutral. Samir, we do appreciate your insight today on Trading Nation. We'll see you again, I hope. Take care.
Thank you.
And thank you for watching Trading Nation, folks. I'm Brian Sullivan. Until next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.